Good morning, everyone. Ken Massia here with Advisors Capital, and I hope that you are faring well during these very unusual circumstances that we're currently living in. So, I've got a few things I want to discuss today, so this video is probably going to be a little bit longer than what I usually like to make, so please be patient, and I think that I've got a lot of information that you're going to want to know, so please watch all the way through. So the very first thing I want to discuss is the fact that my hair is still short. Okay, so how is that? Well, right before this government lockdown occurred, I actually hadn't had my hair cut for about a month. Okay, and a month is about as long as I ever like to go without a haircut. All right, because I hate it when my hair is long. And I was actually starting to look a little bit like Ted Nugent. And being an old guy, I actually like Ted Nugent and his music from my youth. But I don't want to look like Ted. And so what I did was I went on eBay and I bought a Remington buzzer kit for $20, and I cut my own hair. Okay, so you put the little guides on and I left it a little bit longer on the top so I wouldn't have the total buzz cut look. And I'm actually pretty happy with the way it turned out. Okay, so surprisingly enough, you can do it yourself. So go, you guys out there who want your hair to stay short, okay, go get yourself a pair of buzzers, and maybe you can get your wife to help you. My wife didn't want to have anything to do with it, and but because I think she was afraid I would blame her if it didn't work out, and she's probably right. Okay, so now on to the really important stuff. I've got two items of business which relate to the mortgage industry. The first of which is mortgage rates and what's going on with those. Okay, and secondarily, what's happening in the mortgage industry as a whole. All right, so mortgage rates have been very chaotic, and there are just troubles in the financial system right now that relate to the COVID virus and all the uncertainties that surround that. Okay, so mortgage rates haven't been immune to that, and there's no magic wand that anybody waves out there, not the Federal Reserve or individual banks or anybody else. There's no magic wand that makes interest rates be one level. Okay, so interest rates on mortgages are set in the mortgage-backed securities market and are dictated by the supply and demand of mortgage-backed securities or mortgage bonds. So mortgage bonds are a pool of individual mortgage loans that are bought by institutions, pension funds, large investors, and they buy them to collect the interest on those mortgages, and they are an investment. Okay, so mortgage-backed securities are an investment. The supply and demand of that investment is what causes rates to rise and fall on any given day. Okay, so one of the things that's happened recently that's caused mortgage rates to be all over the map, and when I say all over the map, I mean the rates on mortgages have been everywhere from 3.5% to 4.5% over the last 4 weeks. And sometimes ranging from 3.5% to 4.5% all in one day. Okay, which is really unheard of. But things are stabilizing a little bit right now. And that's due to the fact that the mortgage-backed securities market is being stabilized by the Federal Reserve becoming a purchaser of mortgage bonds. Okay, so when there's an oversupply of mortgage bonds in the market, the Fed can step in and buy some of those to keep the playing field level. Okay, so making supply and demand match each other more evenly, and that keeps rates stable. All right, so yesterday a colleague and friend texted me with a story they saw on CNN, and that story was saying that the mortgage industry is about to collapse. Okay, this is a crazy statement, and obviously freaked her out and would freak me out too. I didn't see it, but sensationalizing the news right now is a big deal for news agencies, and so this was a television broadcast, and it's kind of a crazy statement. The mortgage industry is not about to collapse. Okay, you can't have the mortgage industry collapsing, and the federal government would do anything possible to ensure that that did not happen. Okay, so I want to explain why that statement was made and what is causing distress in the industry. And there's a lot of things, but the main thing that related to that specific story was that the government has told Fannie Mae and Freddie Mac, the big conventional mortgage buyers in the United States and the poolers of mortgages, that they should allow mortgage borrowers to delay payments if they're having financial distress related to the COVID virus and the home quarantining and all the stuff that's going on. Obviously, there are a lot of people who are not working, and that's going to cause trouble for them to make their payments. So the government's doing the right thing here. And so it's possible right now to delay your mortgage payments and not have a negative impact on your credit report and no reporting of that for a few months or a certain period of time, depending on your loan servicer and their decisions. And so that's a plus. But the bad news is on that, from a mortgage loan servicing perspective, that's your lender collecting your mortgage payments. That lender is paying those interest payments that you're making out to the investors of the mortgage bonds. So if a servicer isn't collecting interest on mortgage loans, they still have to pay the interest out. Okay, so you'd have to have a lot of money. If you've got several $billion of mortgage loans in your servicing portfolio and 10% of them are not making their payments, then you've got to come up with a lot of interest money out of your own pocket. Okay, so that could cause a huge liquidity problem for mortgage servicers if it wasn't addressed, and could cause people to go out of business. All right, but that isn't going to happen because the Federal Reserve Bank is making liquidity loans available to mortgage servicers, and the federal government is putting things in place to make sure that that does not occur. Okay, so the mortgage industry is not going to collapse. Okay, everything is fine. And the government has really done a great job to ensure that this COVID virus does not result in, really results in the least major economic impacts possible, because there are some really big negative things that could come out of this, but the government is responding to the needs of the financial community in our country, and that is extremely important for us to remain stable. Okay, we have to remain stable so that when this ends, that we can return to normalcy in our economy. And in the meantime, we don't have a lot of people having financial troubles that aren't their own fault. Okay, so in conclusion, haircut, buzzers from Remington, mortgage rates starting to stabilize, mortgage industry not going to collapse. All right, so I want to thank you for listening. I would like to say that I want you to stay home, stay safe, keep your hands clean, watch out for your family members. Call those people who are not in your home, that are in your life, and tell them that you love them and miss them, and that you will look forward to seeing them in person. Okay, thanks very much. Stay safe, and I'll see you next time.